The crypto pump continues. We're now 62,000 plus. And if you look at the bubbles, you can see that today a whole new range of tokens has started to explode. You got 𝗥𝗚𝗧 up 57%. How many of you took the 𝗥𝗚𝗧 trade that we gave the other day? You got the AI tokens up, and I mean, I'm happy, but I'm not also happy about that. You got the HEX tokens up. What we're realizing is that this market is moving very, 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 very fast. In fact, much faster than we thought it would move. And in this market, when the market's moving this fast, you need to be in tune with the narratives. So today I've got a very, very, very special show for you guys. I've got a guy who took a couple of $1 million and turned it into a couple of $1 billion in the last bull market. And today we're going to ask him exactly what narratives he would be investing in right now. We're going to ask him how much money he would be invested in right now, what percentage of his portfolio he'd be investing in right now, and what his exit plan is later on in the bull market. So crazy, crazy, crazy Friday banter. It's a real treat to get 𝗬𝗎 on. Let's do it, guys. I did say that I was happy about the AI coins, but I'm also unhappy about the AI coins because my short is still open and it's starting to burn. My short on AGIX is starting to burn. It's $85,000 down, as you can see with it. And I've already taken $27,000 in profits. But I mean, the overall portfolio is doing quite well. Our Solana position's doing very well. The rest of our positions are all beautifully in the green. And the bull market continues. The crazy bull market continues. So listen, today we've got a massive show. A lot of people said to me, why are you getting 𝗬𝗎 on? Guys, 𝗬𝗎 took a couple of $1 million and turned it into a couple of $1 billion. Now, yes, he was over leveraged and eventually the whole thing fell into a pile. But if you look at what the liquidator has, the amount of tokens that the liquidator have from 𝗓𝗏 Capital today, creditors will probably be made whole. And that just shows like that this guy had the magic touch of choosing the right narratives. And I know him and I've spoken to him obviously many times before. And I know that he's got the magic touch when it comes to narratives. This is one of the smartest guys in crypto. And today we're in for an absolute real treat. But before we get into it, I've got to remind you guys, if you're new to crypto, if you haven't already got a VPN, get yourself a VPN. This is not a drill, guys. We're in the bull market now. The hackers are going to get crazy and the authorities are going to want to know where you're surfing from. And when you're surfing, you are exposing your IP address to every single application that you interact with. You can see there's my IP address. It knows exactly where I am, knows exactly who my internet service provider, and you can even use that to track my address. If you want to make sure that you keep your address safe, get a VPN. It costs you less than $3 a month. There's a link below here. When you do that, you also support the channel. Also, once you got the VPN, get this thing called Threat Protect because there's a lot of malicious sites in crypto. And sometimes they'll ask you to connect a wallet. And when you do, you'll just get all your money drained out. And I know you guys are airdrop farming and I know you guys are doing all of that. But please make sure that you don't lose your money this bull market. And the simplest way to do it for $3 a month is just to get yourself a VPN. Go on, get it. I'll wait for you. There is a link below. Come on. Do it. I know you want to do it. Just do it. All right, let's get the show on the road, guys. So the bull market has caught a lot of us by surprise, and I wonder if it's caught our next guest by surprise. In fact, let's ask him immediately. Sue, were you caught by surprise to see Bitcoin trading like Bitcoin's trading now? If I would have said to you 5 months ago that Bitcoin's going to be at like 62,850 at the end of Feb, would you have placed that bet?
No, definitely a surprise. I thought that, ETF flows would have been good, but I didn't think it would be this good. I think the real question now is like, do we get a March 2020 style flush out or not? Because if we don't, then it's really max pain for people who are not deployed because it's no way in, essentially, right?
So a lot of people
move up isn't so fast.
A lot of people have been speaking about this left translated cycle. I don't know if you've seen these tweets, but a lot of people are talking about this left translated cycle. In this left translated cycle, they're kind of equating the ETF approval to potentially what the halving was. Do you think this left translated cycle is a real thing, or do you think that this is just ETF inflows? We've never seen this amount of money flowing into Bitcoin, and we just have to now live with it.
Yeah, I'm not a believer in left translated. I actually think it's more of I tweeted about this today, but I think it's more of a reactionary, like anti-SUPERCYCLE kind of thing where it's like, I don't want to, the cycle's going to be over really fast, guys. So you don't have much time left. It's a bit of like a capo style meme, I feel. But I think, ETF flow, we don't know what happens if ETF flows reverse. but they may not reverse if it's like gold ETF, right? Like gold ETF, when it first came out, people just buy it and they don't think about it again. I mean, especially a lot of Americans, they have to pay short-term capital gains tax if they sell that anyways. So most don't go for the quick scalps like, you know, we might do in crypto itself, because it's not something that people do as a behavior. So, you know, that being the case, that locks up a lot of supply, I think.
So the ETH ETF definitely pushing the supply. What do you think of the length of the cycle? So a lot of people are saying expedited cycle. We did say left translated cycle, but I mean the normal cycle is that the all-time high happens, I don't know, 400 or 500 days after the halving. Like, yeah. Do you believe in the halving cycle? Do you believe that we're in that kind of cycle?
I think halving cycle is important. I think though that it will break eventually, right? Like you've seen it break on some alts that have halvings. For instance, Litecoin halving, some people did position into and it didn't do anything because no one cares about Litecoin. There's potential for the halving to matter less and less over time. But especially if it starts to not work one time. But I do think that we're definitely nowhere near, let's say, the end of a cycle, because, you know, until you break all-time highs, retail doesn't come back in, right? Until you really break those convincingly. I mean, mainstream media is only now, you know, with a 60K break, they're picking it up now and they're saying, wait, it's back again. We thought it was dead. We thought it was all frauds and scams. So I think it'll be, you know, I had this tweet in the last cycle, which is like, you'll know this real bull market when people that you didn't think were in crypto make more money than you in crypto. That's when you know it's like real bull market.
So do you think that, I mean, Coinbase going down this week, do you think that was just like a warm-up test run for the actual bull market? Because it kind of did feel,
yeah,
for us that have been here for multiple cycles, like it was the first day to me that felt like a real crypto bull market. It was at first like everyone was euphoric, everyone was trying to ape in, the exchanges started to go down, the liquidation started to happen. It was the first time that I felt like I was in the 2017 type bull market. But you think that the real bull market only starts when the all-time high gets broken?
I think that's, if you look at proper sentiment and FOMO from, let's say, the man on the street, that comes with an all-time high break. It also comes with, let's say, generally speaking, like a meme coin pump, a meme coin revival, because meme coins are something that the man on the street can relate to, whether it's Dogecoin or, you know, whether it's other animal coins. It's something that they can say, okay, there's a chance now that I can just buy the animal coin that my friend shows me and be up 100x, right? That to him is exciting. That to her is exciting, and it's fun. So I think that, you know, thus far, I think it's more been a crypto native cycle. You know, you've got like restaking narratives on Ethereum. You've got Solana. I mean, Solana has had more retail, I think, for sure, has had its meme coin cycle earlier. But if you look at Ethereum ERC20 flow, it's pretty dry. I mean, Pepe has had a good 24 hours, but you know, it's you're not seeing the big moves yet, right? Like, to give an example, it's like Shiba Inu for the first year versus like the late stage of it is very different. And so the coins that would be Shiba Inu of next cycle, they're behaving very quietly now. So
you're saying we're very early in this cycle. Question is, how would you play it now? Like right now, would you be deployed? Would you be fully deployed now? Would you be 50% deployed? How would you be playing the cycle right now?
I think at these prices, you can be somewhere like 2/3 deployed. I think I mean, the one problem I think is that the leverage in the space is really high right now. It reminds me a lot of March 2020 in that sense, which is that yes, the halving is coming, and yes, you know, it's good, but the funding is out of control. I mean, we're at well over 100% funding on many different alts, and it's, you know, maybe this time is different. I mean, I think it's something where the blow off top for these alts, and then the you know, the reset, it can be at a level still higher than where you thought it should be. So that's the caveat with funding resets, right? Like ETH now, if it goes to 4K and then resets to 3.3K, you still can't buy in if you sold it at like 2.5K, right, or 3K. So that would be kind of like the max pain for everyone, right? And I think we saw a bit of that 2 days ago, where, you know, Ethereum is, you know, I think there's like 1.5 billion of OI reset of liquidations, but, you know, the market only fell like 3K on Bitcoin. from the top. And it's like, how did people manage to get liquidated when it's going up only, right? But it's a crazy market now. I think all-time high volumes were hit on Binance perps.
Yes.
Absolutely insane. Like, yeah. So
I mean, from experience, we know that once the parabolic part of the altcoin season starts, it looks something like this. And as you say, once you get into this section over here, there's like kind of no way in. It looks like we're pretty much in that area. So if you were not 100% deployed, what would you be waiting for on the other? Would you be waiting for a dip kind of like lower than like retrace or?
Yeah, you could look for a dip like that. You're also earning, let's say, over 150% funding if you, let's say, just do a funding trade now on it, whether that's, like, you're farming stables or you just actually buy the coins, sell the perp. But yeah, you're getting paid a lot to wait right now. So there's oftentimes, if you're getting paid to wait by the market, sometimes the market will then give you the reset that you need. Like that was actually the thing that 𝗬𝗓𝗏 was really good at in March 2020, was that essentially that we had been very patient then, and then as a result had the opportunity. This time, I do think with the ETF flows, there is more of a caveat, because it could be that everyone wins, right? Because the spot flows come in, and even though people are paying this high funding, the spot flow is still higher. And unlike last cycle, this cycle, the exchanges are not trading against customers as much, right? Like FTX was notorious for trading against customers, and after the liquidation, they would write a thread about how they just liquidated everybody. And this cycle that doesn't really exist. Binance is kind of more regulated now as well, or just more tame also. So you kind of, when the price is going up and the funding is very high, there's no incentive for any of the exchanges to nuke it, right? To collect, because in the past there was, because they would internalize those sells. So you're buying versus them, and then they're like, okay, when do we, like on a Sunday morning, like people are going to wake up and they're going to be, that's the way they're going to think, right? But now there's like, okay, as long as they're paying the funding, we're short perps, long spot, we don't care. So that's a very different dynamic, I think. And that's why you haven't seen the kind of really aggressive resets that you saw last cycle, in part because no one gets paid on those anymore.
Yeah, so I think I think certainly that market dynamic has changed. Also, I think you said it quite correctly. There seems to be like this constant pipe of inflows, and I think what we need to see is what happens when the market turns, because these guys are experiencing their first bull market, and I think that when they experience their first, 30% drawdown, let's see how the ETFs react to a 30% drawdown. We haven't seen that game yet. And I think that's going to be that's going to be quite telling. I tweeted something the other day around alts, and I wonder if you share the same sentiment. I tweeted something which said that the Bitcoin is now being funded. Bitcoin is now being powered by the ETF and what we call the institutional money. That money has to flow into altcoins, and the altcoins currently are being powered by people like us, right? Because they're not buying altcoins. So it's almost like the alt season is going to be funded by Wall Street. It's almost like Wall Street's going to inject money into Bitcoin. We're going to offload some of our Bitcoin, and we're going to take that money and kind of put that money into altcoins. And it's like, it almost feels like this pipe is going to get into Bitcoin, and then that's going to land up flowing into altcoins. But it hasn't started happening aggressively yet. I mean, do you agree with that thesis?
I agree with the thesis, and I think it's always happened that way. But alt seasons generally, I mean, in terms of like a proper multiples on many coins, alt seasons, for people who've been through many cycles, they understand that it's actually a shorter period of time than you would expect, but the moves are very aggressive in that period. A good example of this is XRP, right? In December 2017, we're talking about 5 cents to $3 in about 50 days. I don't know if that's exactly right, but I think it's we're talking about like 40x, 50x moves in a month or two. I think that there's that element where when people finally think alts can never go up again versus Bitcoin, that's when they move. So usually what tends to happen is that people over position in alts in the beginning of a cycle because they think, well, alts go up faster than Bitcoin, so I have a levered Bitcoin position by owning further down the risk curve. And then realize that in the beginning, for it to happen, optimism must come back to the Bitcoin market, Ether market itself. And so then they're like, oh crap, I'm owning these coins that no one's buying, or it's generally going sideways on. And so they capitulate, and then eventually that then becomes, it forms that alt bottom, and then the ricochet off the bottom of alts versus Bitcoin is extremely aggressive because the supply runs out, right? And generally alts like to see other alts go up too. There's kind of a reflexivity pricing there where it's like alts don't usually, unless you have a very good narrative on the alt and so on, they kind of don't like to, you know, waste their bullet or waste their chance pumping when like in a high Bitcoin Ether dominance scenario, because it's like, you know, what are the odds you're just going to get sold into for people trying to, you know, get back their Bitcoin, right? Whereas, you know, when Bitcoin stalls at a price, Ether stalls at a price, especially when Ether stalls at a price, then people start going out the risk curve because they can say, okay, you know, I don't think the bull market's over. At the same time, I'm ready to play because I don't think Ether has that upside anymore. So, you know, we could see that at Ether 4K or 5K. We could see that at, you know, Bitcoin. Actually, we don't know where we'll see that out in Bitcoin, because I think, you know, if it breaks all-time highs in the next few weeks, maybe closer to 80K, 100K. So.
How would you be positioned now? Would you be positioned in Bitcoin? Would you be positioned in ETH in anticipation of the ETH ETF trade? Would you be going lower down the risk curve? Would you be going into the layer ones? Let's talk a little bit about it. Like, let's go down. How would you be positioned? Which narratives would you be positioned in? Because I mean,
Sure.
just for those that don't know your history, you guys built an incredible, huge portfolio at 𝗓𝗢𝗡𝗧 in the last cycle. I think you guys started. What was the starting capital, or what was the starting position there?
Starting capital just a few $1 million, yeah.
And what was the peak value of the portfolio? The peak equity value of the portfolio?
A few billion, yeah, a few billion, millions to billions, basically.
And you did that. You did that through investing in the right narratives, the most incredible deal flow, a whole lot of leverage. We'll talk a little bit about what happened and what went wrong a bit later. But I'm keen to know, like, in this cycle, how would you play this cycle now?
You mean in general, or you mean like how should the audience play it?
If you were trying to rebuild a 𝗓𝗢𝗡𝗧 capital right now, from a few million to a few billion, where would you position your bets now? Would you be in leveraged Bitcoin? Would you be in leveraged ETH? Would you go lower down the risk curve and go into layer ones?
I think you can see it broadly in a few different kind of opportunity sets, right? Like, one is airdrops. I think are incredible opportunity this season if you put in the work, right? Because not all of these airdrops are linear. Many of them are non-linear. So if you get in the weeds and you do your work, you can make huge multiples on small capital. And we're talking about, like, you know, from tens of thousands into millions possibly type things. I think that's something to look at if you can do the work. I think that on trading itself, you know, I think Solana has been a really impressive move. And I think that even with the estate selling, you know, the prices just doesn't care. And I think part of the reason for that too is kind of a deeper idea, which is that when Alameda and FTX own so much SOL, it's bearish for the price in some sense because it's less distributed. When that supply gets distributed, it becomes more bullish. Similar as what we saw with Ethereum in 2018, which was held by all these big ICOs, and then the ICOs capitulated at the bottom. And then, you know, it was owned by the masses, right? So that's kind of happened in Solana. And then I think with the Solana estate sales, you know, on the one hand, people are saying, okay, you know, if the estate's having to sell at 30% discounts, isn't that bearish? Because people will sell spot, buy. But I think that's like a mid-curve view, actually, because I think, you know, a lot of the people who are going to be buying this lock SOL, first of all, they cannot sell perps against it because they'd have to margin it, and they can't use their lock SOL to margin it. Second of all, they may just want to be bullish, and they'd be like, I'm getting an extra pickup from that discount, so this will be how I express my view. Because you know, TradFi money, big money, they love a discount. Everyone loves a good deal. So the odds that this SOL actually needs to get sold in the market is very, very low. And also, you can't buy this on leverage, so you have to buy it with spot. So actually, I see it kind of as a bullish thing where, you know, the SOL is getting distributed into relatively strong hands. This will get distributed at some point, but nowhere near, you know, it's a linear vest on these things. So I think that I personally don't think the Solana versus Ether top is in. I think that we will see a higher price there at some point in the cycle.
Do you believe that SOL is going to be the alternative layer one, and maybe not even the alternative layer one, maybe it could even be the main layer one? Because I'll tell you my thesis. I look at Ethereum, and I think Ethereum was great last cycle. But the reality is, I don't really see a world where ETH can sustain its number one position. Because other than the fact that it has TVL, and it has a whole lot of investment in layer 2s, and now the whole restaking narrative. And maybe that's enough. And that's where I want to hear your view. I kind of think that if I was a dev and I was faced with a choice to build a consumer application, I would go, well, hold on. If I go to ETH, I can't do anything on ETH, so I'm only going to go to a layer 2. If I go to Arbitrum, it can't really talk to Optimism, which is not going to talk to Matic. So I land up in spaghetti layer 2s. Or I can just build it on Solana. I can build it on a monolithic chain. I can pay very, very, very few fees. I can settle everything on chain, and every app can talk to every other app. And I'm kind of thinking from a dev point of view, if I'm not looking for TVL and I'm not looking for the restaking narrative, then why would I build on ETH?
I think it comes down also, though, to what do we think blockchains are good for, right? Because I think if you look at DeFi, I think EVM, Ethereum, it'll still win DeFi for the most part, because I think, it doesn't have chain shutdowns. It doesn't have, it's generally safer. So when you have big amounts of money, let's say something more resembling a banking system, I think Ethereum does perform that function really well, even though it may be more expensive than using your bank quite often. It's still something that you can count on reliably. And so I think that for, bigger users, for, let's say, proper stuff that you're maybe only doing an action once a week or once a month, I think Ethereum still has that mode. But I agree, for new users, and for new devs, it's going to be challenging to, let's say, build a consumer app on layer 1. That's for sure. I think on layer 2, though, on like an Arbitrum and Optimism, I think, that can happen. I think OP forks are an easy way to do your own chain as well. So I think that's all true. I think Ethereum's value proposition this time is more similar to Bitcoin this time, which is that it's a highly liquid store of value coin, deflationary. You have some activity, but not too much activity that you worry about the chain going down. And then you kind of just vibing, right? I think that's what it is. And then Solana obviously is faster flying. You got, huge amounts of wallet downloads per day, a lot of meme coins going up and down and rugging in like a single, half-hour session. But it's a different. It's more on the edge. I think it's more populist for sure as well. So
would you put more money? Would you put more money into ETH or more money into Sol? If you were investing your own money, building your own portfolio, would you put more money into ETH or more money into Sol?
I think you still need half your portfolio in ETH, because I think that the risk profile of Sol is different than the risk profile of ETH. I think that Solana, while it may fly faster, it still has risks that Ethereum doesn't have, in my opinion. So I think just from a portfolio risk management perspective, I don't think it can be all in Sol. At the same time, I think that I think that if you have only Bitcoin and Ether, I think you will tend to underperform a lot this cycle. Just because I think that, especially spot only, I think spot only, I think you're looking at 4x's, 3x's, I think. So.
And in terms of the layer 1 race, I mean, so we've got Sol seems to be the front runner in the race. How do you see the layer 1 race playing out? I mean, do you see these new shiny objects, these Say blockchains and Sui and Aptos and whatever they are? Do you see another layer 1 catching up to Sol? And if yes, like, who are the contestants?
So, I think Sway and Aptos are definitely interesting. I think that it remains to be seen, though. Like, a lot of these things come down to timing and ecosystem and biz dev. It's stuff that you can't really control. I think it's safe to buy a basket of these. I think that's not a bad play. Just make sure you stake them and get the yields that you need, because sometimes the airdrops from these things can be insane in a real bull market, because all the projects that are on these chains will give airdrops to try to get attention from the stakers of it. So, if you are going to buy them, try to figure out how to stake them yourself so that you get that. If you put it on exchange, you won't get these half the time. I think Cosmos this cycle can be interesting as well. I've talked about it a few times on other podcasts, but I think that generally speaking, the further out the risk curve you go this cycle, the more you will be rewarded, but you have to size it correctly. And that's the same with all cycles, right? Last cycle is the same thing, where if you go out even one level out the risk curve, like from Bitcoin to Ether, you were heavily rewarded, right? And if you didn't go out one level out, you really, you made a 3x to 3x from cycle to cycle, from high to high, right? So, yeah.
And in terms of you're calling it the Cosmos cycle, or the Cosmos narrative, any specific plays in the Cosmos ecosystem? Because it's quite difficult to get an entry into Cosmos as a blanket play. It's not like Bitcoin or ETH or Sol. Any specific bets on the Cosmos cycle?
I think the DEXs on there are okay. I think that I don't want to show too many specific coins because just I think broadly speaking, I think the ecosystem is good. I think that good to pay attention to. I think in general the user experience is getting better. It's still not quite where it needs to be, but I would say user experience for new people, I think Solana is still the best. But I think that Cosmos actually is better than, let's say, Ethereum layer 1 already, just because
no doubt
you can swap for 1 cent, right? You can send money for 1 cent, 2 cents. So I think that people often complain about Cosmos UI UX, but it does need to be pointed out that Do Kwon managed to get a lot of people to install a lot of 𝗘𝗢𝗄 wallets, right? So and so that was last cycle. So this cycle, that could happen again. So I think that should never be counted out, basically.
Talk to me about other narratives that you're bullish on. I mean, I think one of the narratives that I've been looking at is AI. And, on the one hand, I want to ride the AI wave and I want to ride the momentum because I see all the mainstream media headlines, and every time the mainstream media headlines run, so does the whole AI narrative. But then when I deep dive into the individual tokens and then into the individual projects, I kind of look at these projects and I'm going, wow, like, seriously? Can I hold this into the next cycle? I'm not comfortable holding them into the next cycle. So, like, walk me through is there a crypto AI narrative? Let's start there.
There definitely is a long run use case for AI in crypto, right? Because you have this idea that LLMs are they going to run? You have nation gated LLMs. You also will have sovereign LLMs, meaning that people deploy them without sensors and so on, and they'll also be able to do other stuff, and also the cost of compute. So I think that that's all there. I think that BitTensor, I think, is genuinely interesting, their approach. I still need to learn a lot more. I think that the hype around it actually feels a bit like 2017 to me, actually. Like it feels like we're getting proper vaporware, kind of stuff happening in that space. Whereas I think last cycle there was less pure vaporware, I feel, because it was like right after ICOs, you couldn't really say I'm AI, here's the white paper, and then we pump on the white paper, right? Whereas I feel like we're getting white paper pumps again on an AI stuff.
AI.
So
yeah.
I don't actually so I don't think that's actually that sustainable because I think that the replication speed is too quick, right? And the main use case is to and how do you get that traction to go through? But I think that WorldCoin is a super interesting token, very misunderstood. But I think it's basically a Sam Altman personal token, right? Like a social token, because he doesn't own equity in open AI, and this is his thing, right? So I think that the WorldCoin's ability to be an AI beta play has been good.
But I mean,
the fully liquid as well.
The fully diluted valuation.
FTV is very high.
The FTV is ridiculous. I mean, I actually, I took a short and I closed it because I really think that the WorldCoin fully diluted valuation is crazy. I closed it because then I remembered that I was actually betting against a very low float with Sam Altman. 76 billion fully diluted. I mean, I don't know. Isn't that more than AI's valuation? OpenAI's valuation?
Yeah, but I mean, I think the circ will stay low, right? Because I think Sam controls most of it. So in general, in crypto, there's this concept of if there's a low float, then essentially you should treat the coins that are, held by the team or held by the founder almost to be non-issued. It's like shares that you could issue in the future, but you haven't issued.
Unissued share capital. Unissued share capital.
Yeah, yeah, exactly. And especially in his case, you know, his incentives are a bit similar to an SPF's, right? In a good way, which is to say that if the valuation of the market cap of the coin is high, that is good for his brand. It's good for him. So in other words, he does not value the incremental dollar he can get from dumping it on his community. He values the price of it being high for the prestige that it brings him in circles, right? So that's right. I mean, it's the same for Sam, right? For FTT, right? When FTT is high, then y'all want to be his friend and then trade on his exchange. When it's low, you don't. So he doesn't benefit from selling against it. He wants to borrow against it to buy more, right? That's the same mentality, I think. Right. So.
All right. So AI is another narrative. What other narratives are you calling as hot narratives? I mean, I know there's many others that are going. There's the decentralized perpetuals exchanges. There's the restaking.
That I think will be very big. Decentralized perps, I think, will be very, very big. I think you're seeing that already in the last few weeks, where just like the growth is really high on Aavo, on Hyperliquid, this kind of stuff, and they don't even have tokens yet. It's just point systems. It remains to be seen how much volume there'll be after the points end and it's like real tokens or just real exchange. But I think it'll be good because I think, you know, the experience is very similar to CeFi, and I think that the ease of use is there. I think, you know, they both use Arbitrum, which is easy to get your money on and off. It's not too difficult. You can deposit a USDC from CeFi. So I think that the overall user experience on DeFi perp, you know, the main use case is that it's non-KYC, right? If it's non-KYC, that opens up the Pandora's box for people to play around. I think that's always been the case for that kind of activity. I think that you know, restaking is a big narrative. I think there's major risks though. Long run, I think. Short run, it's fine. Short mid run, I mean, I think it's fine. I don't want to say it too confidently, but you know, I did have lunch with this big ETH whale the other day. You know, and he's like, I'm comfortable putting maximum 2% of my ETH in Eigenlayer. That's what he said. So, you know, so that's kind of how people think about it.
Let's talk about restaking, because I mean, Chris Beniski said, while we're still relatively early in the cycle, sneaky leverage always finds a new form. In 2017, it was ICOs. 2021, it was lending desks. In 2025, it could be the rampant restaking. I mean, do you think that restaking is the leverage of our cycle? And if it is, like, can it not take down the whole market with it? Like, can you imagine an Eigenlayer contract gets compromised or something? I mean, I don't even want to think what happens to the ecosystem if that happens.
Yeah, I think that's a major risk. I think it's a bit like money Jenga, right? Where there's so many dependencies, and now we're creating the third layer of the restake, or the fourth layer of the restake. As a product called Gearbox, which you know, now it's offering you 30% yield on passive ETH, because they're going to then use it and put it into, you know, various restaking protocols, and then so that creates the illusion of free money machine, right? Because it's like, where is all this money coming from? But if we don't ask, then it's like just yield. It's just yield everywhere. But we all have learned from last cycle that whenever there's yield everywhere, it takes just 3 days, 5 days for that to not be the case. So I think it's a little bit concerning that we haven't learned anything. But, you know, from a zoomed out perspective, it's difficult to learn things, right? Like, because the participants are different each time as well. The mechanisms are different each time as well. So I think individual people can learn things, but people as a whole cannot learn things, right? That's kind of that's one of the things that one of the traders on CT used to say. And that's why, you know, the tops on coins form in very similar ways throughout, you know, each cycle. And yeah, it's just what it is. So I think that restaking definitely right now is still early, because you haven't really had that that kind of thing. I think when we get, like, Athena, actually, I think is a super interesting project, because I think it's both very innovative and can be very, very risky as well, because, you know, and I think he's talked about how, you know, it's not a stable coin, but it's also marketed as a stable coin because it's USDE. Now, this is actually the same So I see it as like if you're very dumb, you think, oh, this is just like Luna is gonna blow up. If you're smarter, you think this is absolutely nothing like Luna. It's super safe. But then if you're like super smart, you think this is like Luna again. It's one of those things because the way it's like Luna is that when the ether is bought, right? When the clients are buying ether perps, the protocol is buying ether spot and selling futures. It's selling perps to the clients. So the protocol is not taking on the price risk. The client has the price risk. Okay. In the case of the LFG and Luna, the protocol takes on. So the protocol is the client because it's buying the Bitcoin, right? So, but the mechanisms otherwise are all the same in the sense that if the price gaps down and it has too much ether in it, like let's just create a toy example, like $20 billion of ether perps are somehow in this thing, right? And each exchange has their own, insurance funds, but the insurance funds are not enough, right? Especially after the Binance fines that have been paid. Like no exchange has the insurance fund to pay out anything if we get a truly cataclysmic event on restaking, right? So let's imagine you get that. Ether gaps down through the bankruptcy price. No one has any stables, right? Because they actually have ether long plus a short to clients that bought with ether. So you get more coins, but the coins are worth much less in dollars. Now, when that happens, if this USDE was used as collateral in other places,
everything
then
collapses. Everything collapses.
Then it's yeah. So and so then the question is, so 𝗗𝗚 had a really good thread about this, which is say, right now everything looks safe, but then we're gonna innovate, and by innovate meaning we're gonna play with it a little bit. Right? So through that process of innovation, when do we get too innovative and then whoosh, right? So that it will be interesting to watch, I think.
So okay, so I mean, speaking of leverage, that might be the leverage of the new cycle. But let's quickly talk about leverage. I guess leverage was part of the reason that 𝗓𝗢𝗏𝗧𝗏 capital collapsed. It was in the period of the massive leverage unwind. Tell me what happened. Tell me what happened. You guys were the highest flying, smartest investors in the space. I mean, you had the best portfolio. Even now, when I look at your portfolio at the liquidator, I wish I could go to the liquidator. I wish I could have gone to liquidator in the bear market and made him an offer to just offload the entire portfolio. Because even in today's world, that portfolio looks like an incredible portfolio. Tell me the story of like what happened. Like just walk the guys through what happened. You guys built a very small portfolio into a massive portfolio, into a behemoth, and then what happened?
I think it was a number of factors coming together. I think probably the biggest was that we didn't anticipate the speed of credit withdrawal once Luna collapsed. Like we didn't actually have UST, but we had a lot of beta to the market. We had Ether and Bitcoin and later ones and so on. And that was a portfolio that we can post as collateral to lenders and then borrow against to do farming, to do other things. And that was always how it was, right? Like, there would never be that supernatural growth without that. So, our early big trades were like, ETHE, which was put 100K Ether into ETHE, which itself was 300% premium. So we essentially went from 20 mil to 200 mil when Ether was still $300, right? And so, this is always kind of, we had this kind of complex portfolios since the beginning. But I think liquidity really dried up after Luna because there was a lot of recalls on the lender side. So I think the capital base we thought we were dealing with was just very different than what it actually was because of those recalls as well. So I think like, I think if I was older and wiser, I would have just had better lawyers at that time or even before and negotiated the terms better and said, you can't recall just because something happened. We needed to, do something there. And then I think we would have been fine. And I think that the biggest problem really is that since the age of like 24, when we started the firm, like anything we touched, it made money, in the beginning, less fast, obviously, because it was not even in crypto, it was in foreign exchange, but things we touched made money. Even when we were like having a bad year, it's like down 10% or something. So we just didn't really have that kind of, we didn't learn that humility, I guess, of saying, okay, there's going to be things that happen at some point that you don't see coming. Like, what is your plan when that happens? happens, and can you make good decisions and get through that kind of a thing. So you know, I also really regret not working with creditors better to restructure in June, because there was a camp that said, guys, restructure, launch a token, do something, like, let's figure it out. Anything's better than liquidation, right? Because liquidation, it just goes into a vortex, and you know, the next bull market will be fine again. And then you know, there were other creditors that were a little bit more antagonistic. But I think what I realize now is that even the ones who are antagonistic, they just wanted us to give them a plan. Like, they wanted to hear a plan and say, guys, that's what they wanted. And any plan would have been better than no plan. And so I think, you know, we lack the courage to just be like, you know, this happened. We all lost a bunch of money together now, but here's a plan to make it back. And crypto is long, and, you know, it's got full of cycles and kind of these stories. And I think that, I think in some ways it was actually like our first cycle, right? Because even though I've been, you know, here and there in crypto for a long time, like, we came into 2018 with very fresh eyes. And so, because we had stopped our FX business and said we're going to do only crypto. So 2018, we were like, seeing it as like, okay, well, ICOs are mainly a scam, but the innovation that comes out of it will be huge. So that was like a really nice thesis to come into. And then we were looking at other guys as the market went up, saying, you know, you sold your coin, you know, you sold your Phantom at a 3x. Why did you do that? It's going to go 100x. Why did you sell your Avalanche? You know, these kind of things. And then later on, I'm like, well, now I understand why. It's because they were down 95% in 2018. That's why they then sold on the 3x on the way up. So I think I have now like a lot more empathy for everyone in crypto. Like, okay, I get why the old cyclers are the way they are. Like, I get why, you know, there's more battle scars, right? Because I think we hadn't earned those scars, essentially. So, and I think it was similar for SBF and for Do, which is that you just had this kind of idea that, okay, you just, everything you touch, you win here, you win there, and you don't have as much planning.
They say that you make money in your first cycle, and in your second and third cycle is when you actually keep money. And I think for me, like, I made a lot of money in 2017, but I kept none of it. I made a lot of money in 21, and I kept a little bit, but I lost a lot of it on Luna. And I'm hoping that now on my third cycle is when I'm actually going to get to keep money. But so let's go to your portfolio. So you have or had a serious portfolio. World coins in it, and a whole lot of really good projects, I believe, that are now in the hands of the liquidator. When you look at this portfolio, it feels to me like the creditors could probably be made whole. I mean, like, am I right in thinking that?
It's possible. Yeah. I mean, I actually think if you look at crypto in the past, pretty much every estate is massively whole in dollars, right? Whether it's GOX or, like, you know, like other ones. 𝗏𝗏𝗏 is probably the exception, because it didn't have much coins in it then. But I mean, it'll be a function of like where the liquidators ultimately sell the coins, you know, what they'll do, what kind of price they can get for some of the equity in there. Like, 𝗬𝗢𝗏 is doing really well. It's still 95% market share in options. You know, I think FTX estate is now easily whole in dollars. I think that I believe Genesis estate is now whole in dollars. They're just debating now who gets to keep the money above $1.
So how do you feel? So how do you feel now, knowing that had you just held on to it for one more cycle, you would have been whole, and then you would have been a multi-billionaire? I mean, that's like, is that not the calculation here?
Yeah, but I mean, like, I'm a pretty spiritual person. Like, I feel like everything happens for a reason, and I think that there's kind of a, like, if the portfolio does well, then my creditors can get a lot of money back. So that is like a really nice, you know, hopefully then they can get some peace from that. I think that it would have been far worse, for instance, if the portfolio goes to zero and there's nothing there. Then there's like, you know, so I'm not a big believer in this kind of like, it's not enough that I win, you must lose, or this kind of thing. Like, I genuinely, like, I would cheer crypto on, like, without having any. Like, that's not a problem for me. Like, you know, like Andrea Antonopoulos is a guy like that too, right? Who was like, you know, such a great evangelist for the space. And then he, you know, on one speech, he said, you know, I don't own any, like, you know, just for whatever reasons.
And we all ended up sending him money that day because we realized that he was like the biggest evangelist in the space.
Exactly.
How do you feel? I mean, you're back in business now. We'll talk about that in a second. How do you feel back in business? How's the market treating you back in business? Like, I mean, I think there was a lot of flack on you guys when 3 Arrows Capital went down. You went from being heroes to, I guess, being hated by some people. I guess, I mean, I was always one that stood up for you guys, and I kept saying, for me, the best thing is to see the smart entrepreneurs who have failed and have a point to prove, because they know what it tastes like at the top and they want to get back there. And that's why I think, that I always backed you guys. I was always a very vocal proponent saying, these guys can bounce back, just invest in them. And I did invest. We'll talk about that in a second. But how do you walk me through the personal feeling of being a multi-billionaire and then being a multi-billionaire, the main man? Every tweet that you made was liked by thousands and thousands of people. Every token that you tweeted about went up to whatever. You're probably one of the most respected figures in the space. And you went from there to, I mean, can we call it buried? Is that a good analogy, or dead but not buried? Walk me through the emotion. Like, walk me through, how does a person recover from that? How does a person deal with that?
It's actually super interesting that, I mean, from my perspective, almost it was the opposite, where at the top I felt a lot of pressure, and I felt like everyone at that time was fighting through arrows for dumping on people, or creating SUPERCYCLE narrative to create exit liquidity. So as kind of unbelievable as it sounds to people when I tell them this, like, I genuinely perceive less hate now than then, and I think that that's such a difficult thing for people to really understand. But it's because, like, when you're at the top, everyone wants something from you. You know what I mean? And then you're like, the way you perceive kind of reality becomes like, okay. And that's why I ended up getting into all these Twitter fights at the time, because, like, this person may have, like, insulted me in some way or that, and then, like, you get fights with your reply guys, and you do this and that. And then, you zoom out and you're like, wait a second, this is like, if you're that big of a character, like, you're going to have haters. It's not possible to not have haters just by numbers, right? And so you can't let yourself be defined by that number. But
you had haters, but you had haters, but you also had huge admirers. You had people that wanted to be like you, people that wanted to be around you.
Yeah, sure. But just from a perception perspective, like, I didn't actually feel it. Maybe it's because of a COVID thing as well, because, we had our entire growth during COVID. So it's almost like a game, if you can imagine it, right? Like, we basically grew from March 2020. When we're in Singapore, it was like it was not full lockdown, but it was like pretty locked down, right? So, like, you're basically like just playing the game of crypto in your room. Like, we never went to the office. Like, you just do it from home. Like, you're just playing the game, and then you get a high score in the game. And then it just never became that. You get what I'm saying, right? Like, it never became like I was this respected figure everywhere. Like, it didn't feel like that in the same way.
It dawned on me that you took a multi-million-dollar portfolio and you turned it into $1 billion portfolio playing a video game called crypto. I mean, that's literally what you were doing. Because if you weren't flying to the US to negotiate credit terms, and if you weren't...
I had never met a single creditor. Yeah, exactly. I never met a single creditor in person, and they've never met any, it's just I think COVID was this very interesting microcosm of, like, a flurry of activity, a flurry of digital activity, but yeah, it was something very surreal about it. And so, like, after the blow up, it was like a big mental reset for me. And I think that what I realized is that, we flew too high too fast. We should have had more adults in the room. We should have had, more humility, most importantly. And I think that hopefully we have it now. And so I'm grateful for that experience as well, because I think that I wish I could have learned it without needing the experience, but I don't know if I could have actually, because
you don't.
Each time I was rewarded. Yeah.
You don't learn anything from success. You learn arrogance. Success breeds arrogance. And I know this because I was a very high flyer, and until I lost everything the first time round, I didn't learn anything. And I must have I've lost everything, not everything. I've lost everything once, and I've lost a lot twice. I mean, I lost 9 figures on Luna, which is very public. And, for me, I must say both of them were actually very pivotal turning points in my life, which actually turned out positive. That's my personal experience. But I also know that it was very hard. It was very hard for me personally, because it was very hard for me to be the main character and then to not be the main character. That's quite a bitter pill to swallow, which is why I asked you how you handle it. And I think the way that you handle it is very, very different viewpoint from my viewpoint. How does it feel operating again? I mean, you are operating. We'll talk about OX.Fun in a second.
Sure.
I mean, do people still want to do business with you? Are you finding? I mean, you were a magnet. You were, you were the blue-eyed boys of the industry. Like, how does it feel now? How difficult is it to actually operate now?
Well, it's definitely on hard mode, I would say now. But I like that too. Like when I play a video game, I always like it to play on the highest difficulty that it has. So I feel like now we're operating on like real hard mode, and I think it's beautiful too, because I feel like this life is impermanent, and I think that the chances we get to really show our mettle are a great way to challenge ourselves, and so I think that we still have had tremendous supporters, like both yourself, but many people, so I think that that's also the beauty of the internet, which is that the goal on the internet is not to please everyone on the internet. The goal is to find your community, find your cult, if you will, even, or find your friends, and just vibe and just do stuff, right? And that's kind of what we're doing here. And it's a nice change of pace too, because I think trading, I would say we got a little bit too into at some point we did every layer one, every perp dex, every like Aave compound, like clone, like you just do it becomes a bit.
How did you manage to get into all of those rounds? You did everything. You did every single sought after round. You got in. Why did everyone want you in the round?
I think the first catalyst was just really pure. It's that I tweeted a lot of like just good information, just like analysis. We started writing for Bybit Insights. At that time, they were paying me like just like 10K a month to write. And then, I wrote a few articles for them. And then I was like, I actually want to buy a stake in the business. I think it's a good business. And at that time, not many people actually wanted to invest in Bybit. So we let an SPV on it. Some of these put in. But we were kind of laughed at for it, because it's like, why would you want to buy Bybit? Like it's not going to succeed. Like eventually there's going to be, Binance going to come with options soon, or like FTX going to come with options soon. And we're like, no, but I like these guys. I think they'll make it. So we made a big bet on Bybit, and it worked. I think we actually got a lot of street cred for that, because they're like, they did not a crowded round. They just said they liked it and they hit it and they helped it. And so after that, DeFi, we were really active in, and just, because we were trading and farming these things, we understood the market. At that time, it's almost like these kind of GP-LP deals, right? Where if you LP, you also get the equity of the thing that you're LPing in.
Yes.
So DeFi creates these kind of, the elephant that's sucking its own dick kind of thing,
yes.
To put it crassly. But, that's how, ourselves as well as Alameda were able to get in all these deals, because they're like, well, if they invest, they'll put in TVL, so you can't turn them down. Once that goes on, then, but I think we all took it too far. I think that's the problem with actually mixing trading and investing, because for the first period of it, everyone was like, wow, you obviously the best investors are trading firms, because they're able to like, use the, use the tech and use everything. And I think the answer is yes and no, right? Because traders often think in terms of EV too much, and EV is not knowable. Like you don't actually know what the EV is of something. So it's almost like a pretension to like statistics that you can't actually do, because it doesn't exist. So that's why, like SPF was famous for this. He obsesses over like, what is the EV of this? What is the EV of that? At the end of the day, you're just like putting your finger in the air and making decisions. That's what you're doing, but you're calling it EV, right? So traders do this more so, I think, than proper venture guys, because proper venture guys, they'll be more like, I really don't know, but I like the team and I like the founder and I'm putting it in. Okay. And I'm not going to run any numbers, because I don't think the numbers matter anyways, because I don't know how to calculate it. So I think that that's kind of what happened with a lot of stuff actually, where, by an EV calc, you will end up doing every discounted layer one deal, because you're like, well, the price is here, the EV is here, but is it really? How do you know, right? What is the liquidity when the market falls? Like, what is a gap to, a gap to zero on some of this stuff? So I think, I think this cycle, you kind of don't have that trading plus investing thing anymore. And I think it's healthy, honestly, because I think this also can support a mechanism that shouldn't be supported as well when you have this trading and investing combo, because a bad mechanism may be obfuscated by the fact the trading firm is over supporting it, or so on and so forth. I think that happened for sure in the case of Luna in 2021, where Jump stealth bail out of it. But I think it happens in many other coins too, to a lesser extent. So I think separation of trading and investing is very healthy. And
let's go back to the video on hard mode. So this is what you guys are up to. Tell me a little bit about OX.Fun. You did start the open exchange. What happened to open exchange? How did we get to OX.Fun?
Sure. So open exchange at the time was going to be like a claims exchange, basically. So you're going to be able to trade with your FTX claim, borrow against it, and then like buy perps. It was kind of a nice idea, I felt, because that was the month after FTX went down, and then at first we're going to call it GTX, and then of course we didn't go with the name because we just felt it was a bit too on the nose, as it were. But then Justin Sun has called it HTX now. He just skipped the G, went straight to H. But because you guys
stole G, you guys took the G, right?
Yeah, something like that. Yeah, exactly. In the meme space, we took the G. But I think the hope is that we're going to be FTX 2.0, really, because we're going to be like, okay, you can just port over your claim, you can start trading again as if nothing happened. Because obviously the exchange is worth a lot if clients can use it and trade on it. It's worth much less if no one's doing anything. So we felt like that could be cool. And I think we got some traction, but there's a couple things I learned in the process. One is that people are very willing to buy the coin on chain. They don't mind buying coins on chain because they're like, whatever, I can make 5x, 10x, whatever. But if I wanted to deposit like Tether to your exchange, like, whoa, like I'll think about that a bit longer. And if I deposit your claim, if it's a small claim, maybe I'll do it. But if the claim is a big percentage of the net worth, then it becomes much trickier of a proposition, right? Because to hand it over to a new exchange. So I think we underestimated that kind of I think there's two businesses that are both very high trust businesses. Like one is exchange and the second is stablecoin. And so I think that coming out of 3Arrows and then doing OpenX, I think it was a very, very it gets the imagination going. But I think with the nuts and bolts, I think it ran into some issues.
How did that become OX.Fun?
So OX.Fun is basically, it's in the name, but it's more fun. There's no claims here. That there's nothing. It's still trading, and it has better liquidity than OpenX. But for now, the entire collateral of the exchange is in OX, meaning that OX is the margin, OX is the P&L, and OX is the collateral. So if you're an OX holder on chain, you can move your OX here. And we have these kind of gamified concepts where if you perform these missions per day, you're earning a big yield on OX. So this is different from, let's say, a DYDX in the past, which is like, you do volume and then you farm DYDX. Even if you own no DYDX, you can farm and dump it. Here, it's almost like something like an Olympus where you have to own the coin to get yield of the coin. So that, I think, creates kind of a rewarding of the tribe and rewarding of the herd. To then, later on, we will accept all sorts of collat, but the system will still be margin and OX. So when let's say you deposit Tether, if you're not using your margin, nothing will happen. But if you, let's say, put on positions, then you'll be, margining in OX. So if you lose money, some of your Tether will be converted to OX. So this creates also a bid for OX because, as collateral gets liquidated, that forms a bid on OX. So I think, I want to play with this idea of like exchange token where everything possible goes toward the exchange token having the accrual.
It's like a country. So, it's like a country where the shares of the country equal the currency of the country, basically, and you do everything in the currency of the country, and that also equals the equity of the company. I mean, that's what it's the country. That's what it sounds like to me.
Exactly. So there will be. So right now, 100% of fees are burned. But what will happen in a couple of weeks is that there will be a fee vault where you can stake to get those fees, and that'll be time weighted. And then we're playing this idea of a price weighted as well, where you will earn more percentage of the fees based on if you lock for a price or not. And by locking by price, what I mean is that let's say right now OX is like 1 and 1.2 cents, right? If you lock, let's say for 2 cents, meaning that you will not sell this OX until it hits 2 cents, you cannot sell it because it's locked, but you will get a higher yield. You'll get a higher percentage of the fee pool by doing so. So we're just going to play with these ideas, and we're going to build it like this because I think it's more fun. And I think that longer run, we have a great cult. If nothing else, we formed a great cult in the last year. We have this great tech still, and we've had this,
And in terms of money, I mean, have you guys got enough money to make this happen? I mean, this is quite an ambitious. You need to get a lot of market making. You need to get a lot of usage. You need to get a lot of TVL. I mean, I know you guys raised money originally for the OX exchange, and then I saw an article that you guys raised something like 4 million. If it was, I don't know if it was 4 million or somewhere around there. So explain to me, like, how much money have you guys got to make this happen?
There's enough. There's enough for sure.
Okay.
Not an issue. Yeah.
Okay.
I think I'm very excited to build this out. I feel like we know a lot about exchanges. We also know a lot about trading. And I think that if we can add in the gamification, like what I realize is that there's so many people in the space that they've been trading perps now for several years and they lose all their money. And so they lose 100%. And I feel like in the beginning in 2018, when perps first started coming out, you were not supposed to trade with all of your money. You're supposed to have like 95% in cold storage, and then 5% of your Bitcoin you put on BitMEX and you play around. That was the zeitgeist at that time. I think FTX came out, and then later, lesser extent Binance, but they came out with this idea that no, you put all your coins on the exchange because they give you portfolio margin, and then you can do all this stuff. You get yield, you get all this kind of stuff. That I actually think is not the right direction for the space as a whole, because I think it's not supposed to be neobanking. So here it's like, okay, you want to trade perps, you want to bet on this going up or down, you can do so here. But you do it with your coins that you bought. And if you lose money, you don't actually care if you lost OX or Tether or Ether anyway. You lost the money. But here, if my coin is going up and stuff is going up, you're participating in the growth of the network at least, right? It's like if all the people that lost money on Bybit, you earn a piece of Bybit.
So you can money. You can only lose your OX, but if you don't lose, you're adding value to your OX while you're not losing. Have I got it right? So if you lose, you can only. So it's like if I were to liken it to a casino, you're walking into a casino, you're buying the chips up front. If whatever other players are winning or losing, if the casino lands up making money, your stack continues to grow, just by virtue of the fact that you're holding a stack. And if you lose, you can only lose the stack that you got on the table.
Absolutely agree. And so the whole idea is minimal leakage to the outside. It keeps staying inside. Another concept here is like the referral fee game, right? Where, last cycle, the referral fees got to like 70, 80%. And, but those people, that money is coming out of the ecosystem. That's just going to a guy's account and he's going to go and like sell it and he's going to buy Lambos with it or something, right? So here I'm trying to take that referral, using our sort of overall cloud, I guess, or our reach, if we can build that out, and we have several hundred clients already on this exchange that are, live, even though it's still like a soft launch where we don't push it too hard because we're still testing. But basically, if the value that's paid out to the rest of the ecosystem is kept within the coin ecosystem itself, that's, I think, super powerful.
So why has nobody else done this? Why has nobody else done what you're saying? I mean, it sounds like a genius concept. Why has nobody else built this?
I think it's a hybrid model. Like, I think if you look at exchange space, right, each of them have come from different epochs, right? You have the Chinese exchange space, which was the Huobi, OKX, many others in that, BTC China. And that game was won by no taker, no maker fee game, where if you have no taker and no maker fee, then there can be infinite volume because, there's
no fees. It's just
there's no cost of trading. There's no fees. Yeah. And then when the Chinese government stopped that, Huobi still did that for like 6 months longer to be like to win all the clients, and then like, okay, now we'll stop. And then so that was how that game was won. But then when the ICO phase came, they weren't quite sure how to play it. So they're like, okay, so we're gonna list these and then dump them, right? So we're gonna get them and then dump them, and then we make more revenues. So the game in 2017 was like, you get the coins, you dump them on the clients. Now the client's money is your money. And I think CZ was an absolute genius in saying, no, that's not the game. The game is wealth effect, right? The game is a wealth effect game. So we're going to use the cloud of the exchange. People want to harvest our clients. We don't allow the harvest. We instead negotiate a good deal for the client. And then through that, clients all sign up because like, holy crap, like here's where I can make real money, and I'm being protected here. I'm not getting dumped on. I'm actually getting given money to. So I think he invented the idea that exchanges are not for dumping on clients. It's for giving money to your clients so that they later spend, they later pay you fees. So I think that's the evolution. And then after that, all the second tier, it dribbled down. So everyone had their own launchpad and everyone had their own exchange token mechanisms there. I think now though, what we're seeing in the deal cycle is that these deals just they don't exist. So if you're an exchange, you're like, what am I going to put on my launchpad? How is it going to pump? Nothing exists, because what is that deal, right? Teams are smarter, founders are smarter, that they can do their own IDOs. So you're not going to get those kind of deals anymore where it's like Elrond at a low price, Axie at a low price. That was like a 2019 specialty in my opinion. So now I think the exchange space is looking at the other stuff. I think, the DeFi perps with the points and with vaults, I think that's both very interesting. I think social trading, copy trading, vaults are something that no one's done properly yet. So we'll have vaults soon. It's on the website now, still testing. Here's you can put your aux into your friend's vault, and then he's trading for you essentially. And he can take a fee if you want or no fee. But this is kind of like what Hyperliquid already has with vaults, but I think it's more social, because here it's you're just, you can put with many people at once. You can put your aux here, your aux there, and it just becomes something that is, it doesn't have to be big. It doesn't have to be you're putting all your money with him, but it's fun. If your friend made money, oh, you want to see what he made it on? What did he buy? Right? That I think is cool. And I think it's an energy that, perp trading is supposed to be, in my opinion, gamified. It's not actually supposed to be, you put all your net worth on there, you borrow from your house, and then you put it all. That's not what it's supposed to be. So I think.
How long until you launch this? How long till you said this is like a test version? How long until we launch a proper product? How long until we go to market?
Well, so this is already live. It's just a soft launch. So I think next few weeks will be the big ramp up, I think, and hopefully things go well. I think yesterday with the Coinbase down, I think half the DeFi perp exchanges also went down. But these things happen. But hopefully no hiccups too big. And it's exciting.
All right, so listen, Sue, I've loved this. I've loved the Bespoken Markets, and we've actually got into the personal side, and I love to see what you guys are doing. As you know, we're obviously big supporters. We've been telling our community to support it as well. We'll keep following the journey. I guess we'll catch up with you again when the narrative launches. Thanks, man. I really appreciate your time. I think we have gone a little bit over time, but it's always great to speak to you. So thanks for your time. I really appreciate it. We'll check in with you again pretty soon. Thank you, my friend. And to you guys, the Banter fam, I will see you guys again on Monday. Let's hope this pump continues right through the weekend. I'll see you guys again on Monday. Until then, trade well, my friends.